Welcome to a roundtable discussion on the stock market. There has been some renewed interest in the stock market recently, and we'll ask our guests who are fund managers and heads of research on their views as to the kind of direction they foresee in the stock market, and the kind of direction as to whether interest may be sustainable, and looking back, some of the dips in the market, such as immediately post the general election, may have been a buying opportunity for some of the stocks, and so we will get the views of our panelists. On my immediate left is Mr. Kaladir, who is the head of research from TA, and Mr. Raymond Tang from CIMB Principal, Tan Beng Ling from Meridian, Vincent Khoo from ASEAN Bankers, and Mr. Tan Teng Boo from iCapital. So let's start with your views on the current interest in the stock market. Do you see this kind of interest in certain sectors, some accumulation in certain sectors and stocks continuing? Anyone would like to? Perhaps Mr. Kaladir, you could start.
Yeah, basically, I believe if you look at the broader market and the volume, it appears that the market momentum is still weak. I think interests are confined to certain sectors like oil and gas, plantation, and based on new-centric stocks. Like last month, we saw the listing of the restructuring of Telecom and Telecom International, and the listing of Telecom International. So because of that, we saw that last month partly Telecom had some positive implication on the market because of the relisting after the restructuring. Apart from that, I do not see the interest on a broader perspective. The interest is very much centered to certain sectors.
Anyone with views on this?
Well, if I can add, I'd just say that obviously the risk appetite has improved since early March, but we remain cautious of the external headwinds. Obviously, most investors are still sidelined. He just came back from, for example, Hong Kong, and the clients are saying that generally for Malaysia, the indications that they are underweight for Malaysia, and save for perhaps one or two sectors like plantation, which could probably bring some interest back. But the situation we're facing right now is, of course, a kind of stagflation situation in the US, and we have raging inflation going on right now, of all prices hitting new highs, and that's obviously heightened worries that at some point in time, global economies are going to weaken substantially.
Are the funds overweight somewhere else, or are they underweight everywhere?
If you look at the share price performances of regional equities, you can see that there's been quite good recoveries in the badly hit markets, such as Singapore, for example, in the last few months. I would reckon that the markets right now are probably still overweight in the BRIC markets.
Except India, perhaps. That would be the case?
Even India has recovered a fair bit, yeah. But yeah, I'm not too sure, to be honest. I'm not too sure in terms of the weighting, but obviously the weighting has improved compared to, say, a few months ago.
The headwinds that we face, one of those sources of headwinds might be the oil price, which is now about 125, and but we have seen that it appeared the world could live with $100 oil. But do you think the markets would take it gently if at this level 125, or even if Goldman Sachs has it right that it may go to 150 and above? Beng Ling?
I guess actually, if you look at the numbers that are coming out, you may be facing the scenario of a stagflation. I think US, there's many parties proclaim that it's already in a recession. So I'm personally quite surprised that the US market is holding up so well, amidst all this oil price, subprime, and so on and so forth. So I'm actually also, like Vincent, I'm a bit wary on the external front as well. And like he was saying, that in Malaysia, we have to admit that there is, unlike half a year ago, we now have a political baggage that we are carrying, which perhaps explain why we did not rebound as much as the other regional markets. I think all regional markets got very badly hit in March and then early April, but a lot of those markets have recovered far faster than us. I think that is partly because of these political uncertainties. You know, we had that tsunami, and it's still a bit not so certain right now as to the way, how, in terms of policy changes, in terms of whether there's going to be more evolution on the opposition front, and so on and so forth.
But in terms of the political tsunami, looking back in hindsight, certain sectors or certain stocks came back very well and was a very good buying opportunity for those who dared. Of course, maybe not construction.
I think, but like you said, there are stocks there were actually stocks that were hit down. There were stocks that were hit down in the panic. These are non-politically linked stocks. These are stocks with proven management, good balance sheet, and so on. So these are the ones that bounce faster. But there are stocks that are more dependent on policy changes, like construction, for example. And of course, construction was hit because of the increase in building material prices as well. So so it actually becomes a very selective type of market, a very thematic market. But overall volume is not quite there. The overall market breadth is not there. I think it's not unusual to see that in a day when the CI is up 5.10 points, you have got more stocks down in the broad market than up.
Teng Lu, how do you think we should look at these political uncertainties?
Well, I guess if I look back at the previous roundtable that I sat in, which was December 06, and I went through some of the comments that I made at that time, and then comparing with what the comments were after the election results. I think the writing was actually on the wall that reforms that should be taken were not being implemented. And I think the main concern, a lot of the Malaysian politicians, opposition and ruling politicians included, they seem to think that the Malaysian voters are pretty indifferent and pretty naive. I think that's pretty wrong, in the sense that if you look at 08 and in isolation, you get a certain message, but you can't. You have to look at 08 election together with 04 election results. And then when you combine the two, the message from these two election results is very simple. Get this whole country going, for heaven's sake. And I mean, for the man in the street or the woman in the street, it doesn't really matter who is the prime minister, who is ruling and all that, as long as whoever claims to be the leader of the country is really the leader of the country. And
structural changes may take some time to produce results, and strategies that they put in now may take a few years before it bears fruit.
Sure. It's just that our structural changes have taken decades. I mean, I have always looked at things from a longer term perspective. You're right, they take a long time to implement and to achieve the desired results. But when you look at almost one generation that has gone, and what do you get? You get an economy that's becoming less and less competitive. So do we always hide behind this caveat and say that structural changes take a long time, blah blah blah, and then tell ourselves that there's nothing to be worried? I think the message of the 04 and the message of the 08 election result is basically wake up.